Good morning, everyone. Welcome to the first subcommittee meeting of the Government Financial Oversight Subcommittee for the House Appropriations Committee. This subcommittee was created under this session by the leadership of Majority Appropriations Chairman Stan Saylor. This hearing is being recorded, and please silence your cell phones and other electronic devices. Today we're holding the first ever hearing on the Comprehensive Annual Financial Report, or CAFR, which is a required close-of-the-year financial report reflecting the financial position of the Commonwealth. This report is done by three entities: Office of the Controller under the Office of the Budget, the Auditor General, and a third-party auditor. The CAFR is a critical financial document and is part of the financial governance of every governmental entity. To clarify, it tells where government has been, not where it is going. As part of every budget process, it is important to review the prior year finances to establish weaknesses and strength in our finances. By ignoring structural problems or financial governance problems, governments will always fall into financial disarray. Today we have a panel of CAFR experts. Thank all of you for taking the time this morning to join us and educate us on the CAFR. Unfortunately, the Auditor General's office was not able to participate due to scheduling conflicts. There is someone here, or actually two individuals here, to take down notes and get back to us if there's any questions specifically to the Auditor General's section of the CAFR. I look forward to our panel this morning. And before we start, we'll do introductions to House members and any opening comments by a good friend, Representative Briggs.
Thank you, Chairman. Representative Briggs from Montgomery County. I just want to thank Representative Grove for having this discussion. It's an important document that really doesn't get much attention by the legislature. So I'm looking forward to a good discussion on what it is and what challenges we have and how maybe we can fix it in the future. So with that, thank you for coming this morning, and looking forward to a robust discussion.
Good morning. My name is Patty Kim, representing the 103rd District, Dauphin County. Welcome.
Representative Frank Ryan, the 101st District, Lebanon County, and I am a CPA. I'm looking forward to talking today.
Lee James, apologize for being late. Venango County out west.
Thank you. We're going to flip the script a little bit and have Jim Kreiser and Keith Novak of Clifton Larson Allen start off and give us a little CAFR 101 and discuss what it is and their role in that. So, gentlemen, thank you, and please start whenever you're comfortable.
Okay. Sure thing. Very good. My name is Keith Novak. You want to close? Is that okay? Yeah. All right. My name is Keith Novak. I'm a principal with Clifton Larson Allen, and I am the signing principal for the financial statement audit for the Commonwealth of Pennsylvania. Before we go through the slides on the CAFR itself, I just wanted to spend a few minutes just giving you an idea of what the audit process is, how long it takes, and what's involved. First off, we do a joint audit. It's jointly performed by us and the Auditor General's office. We look at each office or each group looks at different things, and then we cross-review each other's work to ensure quality and consistency. The audit is risk-based, meaning that we look at the areas that we consider to be of the highest risk. And that risk is based on a number of factors, including materiality. How large are the numbers? How material are the items in the Commonwealth? The audit is given the opinion based on what we call opinion units. And an opinion unit, unlike a private corporation where you only have one balance sheet and one income statement, that's your opinion unit. In the Commonwealth, we have various opinion units that we're taking a look at. Basically, major funds and then non-major funds grouped together. We give opinions on each one of those. The audit of the Commonwealth is performed in accordance with government audit standards, which is a higher level of standard than just generally accepted auditing standards. There are some additional things that have to be involved there, among which are continuing professional education requirements. The audit is performed over a very long period of time. Basically, we start in May, we end in March. The financial statements of the Commonwealth are generally issued in December, but then there is what we call a single audit or an audit of federal grants, which is generally completed in the March timeframe. The audit is broken up into 3 phases. The planning phase, where we're looking at internal controls and we're looking at how you do what you do. And during that phase, we also test certain internal controls, including computer controls, which Jim Kreiser is part of the team that looks at that. The next phase is the fieldwork phase that usually happens after the year end when we have the numbers, and we perform our testing on numbers at that point in time. That testing includes both substantive testing, meaning looking at invoices, looking at actual support for actual numbers, as well as analytical testing, where we're looking at variances and expectation analyses. And then finally, the final phase is reporting, where the report is pulled together and we review the report, tying in the numbers back to the supporting documents to make sure that the numbers are appropriate, and then also looking at the financial statements to make sure that all the disclosures are made and that the financial statements are fairly stated in all material respects. Again, we generally start in May, we end in March. Okay, as far as the CAFR is concerned, what I wanted to do this morning was just go over how the CAFR is structured and some basics on the CAFR itself. And these slides are pretty much specific to the Commonwealth. So when you look at certain of these slides, you'll see where they're Commonwealth specific. There are a couple different kinds of statements. There are what we call basic financial statements, and then what the Commonwealth issues, which is a comprehensive annual financial report. And what I'd like to do first is go over what basic financial statements are, and then I'll get into what the differences are between that and a CAFR. So on the first slide, we have the components of the basic financial statements. The first component is the auditor's opinion. The auditor's opinion is the only thing that is truly the auditor's. In the entire financial statement, those couple pages are the only thing that we are really responsible for. Everything else in the financial statements is a representation of management. Now, we're looking to make sure that representation is fairly stated, again, in all material respects. But at the end of the day, our responsibility lies with the opinion. After the auditor's opinion, we have the management discussion and analysis. Then we have the entity-wide financial statements, followed by fund financial statements. Now, funds are individual trial balances or sets of accounts to address specific issues or specific items. So the biggest fund that you have is the general fund. That's where all the general governmental operations go. But then you may have other funds where you want to keep track of specific revenue sources and how they're being spent. Those would be called special revenue funds. In addition to that, you have capital projects funds, where you are tracking the money that you're using to complete capital projects or to build things. And then you also have debt service funds, which are used to pay bonds. And then finally, proprietary funds, which are similar to business-type entities. After the fund financial statements, we have the notes of the financial statements. The notes of the financial statements are basically additional information to give you an idea of what the numbers mean, because there are certain numbers that require more of an explanation. After that, we have what's called required supplemental information. It's what the Accounting Standards Board, the Government Accounting Standards Board, indicates should be included in any set of governmental financial statements. And then lastly, combining statements and schedules. And those are generally for the non-major funds. So the next slide is just to give you an idea from a graphical point of view what the financial statement model looks like. We've got the MDNA at the top, followed by the government-wide and the fund financial statements, which have an interplay among them, followed by the notes, and then lastly, required supplemental information. Now, the comprehensive annual financial report is all that and then some. Basically, it adds a transmittal letter, which is basically a letter prepared by the government saying, here's our financial report. The next is an organizational chart to show how the government is organized. A list of specific elected officials and others, followed by the basic financial statements, and then the statistical information. And this is really one of the keys in a CAFR. The statistical information, and I'll go over that later, provides a lot of really good, useful information that spans a period of time, generally 10 years. So that you can see how things are trending and how things are going. And then the Comprehensive Annual Financial Report is eligible for certification by the Government Finance Officers Association of the United States and Canada. That certification is helpful in that it lets you know that your finance department is keeping up with standards, that your statements are in accordance with standards, and quite frankly, bond rating agencies look at that for entities of this size when they're assessing a bond rating for an entity. Now, within the financial statements, unlike a corporation where everybody knows what the rules are, in a government, the statements are very complicated because we have various methods of accounting going on for different uses and different things. The first method is what we call the modified accrual basis method, and that is really close to cash basis. Revenues are recognized when they're both measurable and available. And available means that they are collected within the end of the year or soon enough thereafter to pay current bills. Most current liabilities are recognized, but long-term liabilities are not. So, for instance, bonded debt would not be on the balance sheet of a modified accrual basis fund, nor would capital assets. And so they're handled a bit differently. And modified accrual is usually used for governmental funds, and that's where you'll find that used. Full accrual basis is what we're all used to. Its focus is very long-term, and the revenues are recognized when earned regardless of their availability, and the liabilities are recognized when incurred. In those funds, you will find long-term liabilities and you will find long-term assets such as capital assets, net of depreciation, and bonded debt. And then there's the third basis, the budgetary basis. It's the basis on which the budget is prepared. And it could be modified to include or exclude items, and in certain cases, the budgetary basis is different than the modified accrual. Okay, the MDNA is similar to what you would find in a publicly traded entity's document. So if you were looking at a 10K, you would see an MDNA, which is a high-level overview of what happened during the year. Unlike a publicly traded company where it's real easy to put that together, in a government it's much more difficult because of all the various funds and all the various components that you have. But again, it's a high-level overview. It basically highlights the big things that happened during the year, and it must be comparative. All right, the first set of financial statements that we have are the entity-wide financial statements, and they're on pages 44 to 47. They're on a full accrual basis. So there's two columns, generally. The governmental activities and the business-type activities. Now, the governmental activities are just that, the activities of the government, the things that the government is set up to do to provide services. The business-type activities are generally those entities that are set up to operate in a manner to recover the full cost. So generally speaking, proprietary funds, which we'll get into later, are what go into the business-type activities, and then the governmental funds, as well as internal service funds, are what go into the governmental activities. These are on a full accrual basis, so modifications have to be made to get the governmental funds, which are on a modified accrual basis, to the entity-wide, which is on a full accrual. So if you wanted to look at the Commonwealth as if you were looking at a business from a full accrual standpoint, you'd be looking at that statement. That's where you're going to find all your assets, all your liabilities for all your funds and all the activities. Again, the governmental type is generally governmental and internal service funds. The business type is generally proprietary funds. The other thing is we also get rid of internal balances, internal activity that's happening between the governmental activities and the business type activities are generally eliminated at that point. So interfund payables, receivables are eliminated. Or I should say they're self-eliminated. They show up in each fund, but then they're zeroed out in the total columns. In addition to the entity-wide statement of net position, we have a statement of activities. Now, the statement of net position is arranged a little bit differently than a normal balance sheet. Generally, a balance sheet is assets equal liabilities plus equity. However, the entity-wide statement of net position is assets plus deferred outflows minus liabilities and deferred inflows equals net position. So it's not our balance sheet approach, but rather a net position approach. The net position, which you can think of as equity, is composed of three components. The first is net investment in capital assets, which would be your capital assets less any related debt used to produce those assets. Restricted assets and then unrestricted. And I'll go over those categories a little bit later. The next statement for the entity-wide is a statement of activities, or profit and loss statement, if you will. A bit differently than anything you've probably seen before, because the object of that statement is to find or to determine what the net cost of a particular activity is and how much of the general revenues of the government are being utilized to fund that activity. And so on that statement, it starts out with expenditures or expenses and then takes out operating grants, capital grants, and charges for services to get to a net expense number. And then those net expense numbers are accumulated and offset against the general revenues. The general revenues being those things that are raised that can be used for any purpose or are not restricted to a specific purpose. So for instance, property taxes, sales taxes, unless specifically set aside or specifically legislated to be used in a specific manner, would be general revenues. Okay, now getting back to net position, the net position, the net investment in capital assets, as I indicated, was capital assets net of outstanding debt. The idea here is to give you an idea of what's available to be appropriated and what can be utilized. Because one of the issues with reading financial statements, especially government financial statements, is you get to the net position line and you say, oh, I've got all this money I can spend. But that net position is made up of a bunch of different things. One, the net investment in capital assets, unless you're going to be selling bridges, roads, and other immovable capital assets, they're not convertible. They're not going to be able to be utilized for spending, but they are a part of equity. The next category is restricted. And restricted is where somebody either outside of the organization or through legislation has said that this particular funding source can only be spent in a specific manner, meaning that your hands are kind of tied except for the way it can be spent. A good example of that would be a federal grant that says it can only be spent on, let's say, highway renovation. You can't spend that money on anything other than highway renovation. And so it would show up in the restricted category. And then the final category is the unrestricted category. And the unrestricted category is generally those funds which are available, but not necessarily currently available. Because In those funds, you may have long-term receivables, which you're not going to be collecting, for years to come. So they wouldn't necessarily be currently available, but it is the amount that may be available for funding purposes. We already went over the statement of activities. So that's the entity-wide level. And again, that's on a full accrual basis. We then get into the fund financial statements. And the fund financial statements are generally on pages 48 through 64 of the current year CAFR. The focus is on major funds, and major funds are determined through a calculation, basically. They're your bigger funds. And generally, they're defined as 5% of a category or 10% of all funds. That's generally how they're calculated, but it's a much more complicated calculation than that. Again, the governmental funds are on a modified accrual basis. It's the closest thing to true cash flow, and the funds are intended to provide governmental services. So generally, you have government general funds, special revenue funds, capital projects funds in that category. The next category is proprietary funds, which are on a full accrual basis, and you generally have two types. The first is an enterprise fund, which is a fund that is set up to effectively break even. So let's say you had a community swimming pool, and you wanted the community swimming pool to be self-sustaining. So you set it up in a enterprise fund, you charge a fee to utilize the pool, and it allows you to measure, just like you would for a business, whether you're making money, not making money, breaking even or not breaking even. And generally, enterprise funds are providing specific goods or services for a user fee that's specifically linked to that good or service, as opposed to just a general welfare type of service. And then internal service funds are funds that are designed to be break-even, designed to capture all the costs, but the only customer, if you will, are the departments of the Commonwealth. So that's why it's called an internal service fund. It's providing services internally. A good example of that would be a carpool, where you have cars for use by all departments. And so you capture all the costs of maintaining that carpool, and then you apportion the costs out to the various departments throughout the year. Now, governmental funds, they have a balance sheet where assets equal liabilities plus net position. But the other thing that you find is there's a reconciliation page in the CAFR that will reconcile the modified accrual basis statements to the full accrual basis statements, effectively showing you what's not in the governmental fund statements that's in the entity-wide statements for governmental activities, and what is in the governmental fund statements that's not in the entity-wide statements. And so it's just a reconciliation to show you how to get from point A to point B. Then we have a statement of revenues, expenditures, and changes in fund balance. The term expenditures is used here because it's more of a cash basis statement as opposed to accrual basis. And again, we have a similar reconciliation there. And then we also have budgetary comparisons for major governmental funds with legally adopted budgets. The proprietary funds are a little bit different. They have a statement of net position where assets minus liabilities equal net position, similar to what you have at the entity-wide. The statement of, or the profit and loss statement, if you will, is the statement of revenues, expenses, and changes in net position. Again, changing back to a full accrual term for expense. And then a statement of cash flows. The statement of cash flows is basically a statement that says, here's where your cash came from, and here's where it went to. Then the net position of governmental funds is categorized by their availability for use. Keeping in mind that The governmental funds is closer to a cash basis, so the net positions are normally a little bit more current and a little bit more available to be spent. The first category is what we call non-spendable. There are certain things that are included in a governmental fund which are not readily convertible to cash. Among them are prepaid expenditures, inventories, and long-term receivables. Again, we're trying to measure the availability of funds to be committed. The next category is restricted, similar to the entity-wide. It's restricted by external sources or enabling legislation. And then below that, we have the unrestricted categories. And the unrestricted categories are broken down into three. The first is committed. Committed is where we've set aside funds that are going to be used in a specific manner, but we can't restrict them, because unless we have enabling legislation or somebody from the outside says, you've got to use it in this way, the best you can do is commit it. The next category is assigned. Assigned is the intent to use something for a purpose. And that is usually given by the highest level of authority, or it could be designated to somebody at a lower level. And then the last category is unassigned, and unassigned is that which no specific use has been claimed for those funds at that point in time. So if you were to go down non-spendable, the least spendable of the bunch, restricted, tighter restriction on the availability for usage, committed, a little less restrictive, but restrictive nonetheless, assigned, a little bit looser, and then lastly, unassigned. And then the proprietary fund net position is similar to the entity-wide, net investment in capital assets, restricted and unrestricted. Within the Commonwealth, the major funds that you have are the general fund, which is the general operations of the government, the motor license fund, which is the operation of the collection and use of the Commonwealth's motor license fees, and then we have 48 special revenue funds, which are non-major, and they're detailed in the CAFR themselves. We have 6 capital projects funds, which account for acquisition or construction of major capital facilities. And then we have 19 debt service funds, which account for the accumulation of resources for the repayment of debt. With regard to the proprietary funds of the Commonwealth, we have the Unemployment Compensation Fund, the State Workers Insurance Fund, the State Lottery, the tuition payment, the State Stores Fund, which is basically the Liquor Control Board, the Commonwealth Financing Authority, 12 non-major funds, and 2 internal service funds, one being the Purchasing Fund and the other being the Manufacturing Fund. The next category within the statements is the fiduciary funds. Now, if you notice, up to this point, I haven't included the fiduciary funds in the entity-wide or the other fund categories. And the reason for that is the fiduciary funds are more or less considered arm's length funds, like third-party funds outside of the government, because you have no ability to utilize those funds. Those funds are set up for specific purposes, such as the employee benefit trust funds. Those are set up to provide pension and other benefits to the employees of the Commonwealth. Once the money goes into that trust fund, it's not available to be utilized for any other purpose. There's an investment trust fund, there are some private purpose trust fund, agency funds where the Commonwealth is effectively acting as someone's agent to hold funds for them, but they are to be used by those individuals or those parties at their behest. Generally, the fiduciary funds are on an accrual basis. They have a statement of net position and a statement of changes in net position. However, agency funds, because of their nature, do not have a statement of changes in net position because they have no net position. In those funds, assets always equal liabilities because I'm holding the assets for somebody else, so I always have a liability to someone else. Following the fiduciary funds, we get into the notes to the financial statements. And the notes are quite lengthy. As you can see, they go from pages 160 or page 65 to 183, so a little less than 120 pages. They are there to complement the numbers in the financial statements and to provide further explanation. The first note, which is probably one of the more important notes if you're not familiar with government financial statements, is a summary of significant accounting policies. That's where it's explained about all the different accounting policies used by the Commonwealth, including the funds, the descriptions of the basis of accounting that's being used, the tax calendar, the budgetary process, and other general items of that nature. The next item is property taxes, followed by cash and investments. Now, the cash and investments note in the government is quite a bit different than you would find in the private sector, because what we're looking at is not just cash balances, not just investment balances, but also what risks are there with respect to these particular investments. And the risks are custodial risk. How are they being held? Who's holding them? Effectively, in the event that something were to happen, how likely or how easily would the Commonwealth get its funds back? Credit risk. How creditworthy are the people that you are investing in from a fixed income standpoint? So, for instance, the U.S. government is considered to be highly creditworthy, but you may have some debt within the pension funds, for instance, that are in a private corporation, which may not have the same credit rating, or you may be holding some municipal debt, which may not have the same credit rating. Interest rate risk, which is the risk that your value of your investments will go up and down with the swings in interest rates. In other words, if you're in a low interest rate environment and you have a lot of investments in those rates and the rates start swinging upward, the value of those investments would go down. So what is your exposure there? Concentration risk. How much do you have in any one entity? Do you have significant concentration? Again, the U.S. government is not considered with regard to concentration risk. And then lastly, foreign currency risk. What is the likelihood that a change in a foreign currency will have an adverse impact on your investments? The next note has to do with receivables, basically what are the components of the receivables you have, followed by a capital asset note. Now, the capital asset note and the long-term debt notes in the government, again, are a bit different because it not only shows you the balance, but it also shows you the changes, what was added and what was retired during the year to get to the ending balance. The next note has to do with interfund balances, basically receivables, payables, as well as transfers in and out. The difference between the two is the receivable payable is, I owe you, you owe me. A transfer is I'm giving you money, you're receiving money. The one gets paid back, the other is just a transfer of funding. And then long-term obligations, short-term debt, self-insurance liabilities if you have them. Pension plans. Pension plans, a very important note, changed a couple years ago where it shows how we're coming up with the pension liability that you're showing on the face of the statements, which is effectively the pension liability less the assets that have been set aside for that liability. And that's a quite lengthy note, but there's a lot of important information in there. Other post-employment benefit plans. The note for that last year was under an old standard that was in effect. That standard is changing this year to be more like the pension note. So in the past, other post-employment benefits, you recorded a liability if you didn't fund what you were required to fund. So if you were required to put, let's say, $100 in, and you only put $50 in, you ended up with a $50 liability. that liability was the liability for underfunding as opposed to the liability for the plan itself. The new standard is, what is the total overall liability? What have I set aside up to this point in time? And the net between the two is the liability you will be recording. So the liability will go up pretty substantially. It's similar to what happened when the pension standard was implemented a couple years ago. It was a shock to a lot of people's systems when they saw those liabilities. Certain agency fund claim liabilities, that's not a significant note. Joint ventures, to the extent that you have them. Tax abatements, which was a new note that was installed last year. That note is to highlight any large or significant contracts or agreements you have with people to abate their taxes. So, for instance, if you were to lure a large manufacturer to the Commonwealth, and part of the deal was, we will not charge you, franchise tax or corporate tax for 5 years. That would be an abatement because you would otherwise be eligible or allowed to charge that tax, but you've foregone that. That would go into the footnote on tax abatements. And then a couple other things in the notes: commitments and contingencies, net position and fund balance. The net position and fund balance is just a further breakdown of those categories. So, for instance, in the restricted category, you've got restricted on the face of statements. In the notes, you have what it's restricted for, broken down. The assignment, you have what the various assignments are in more detail. Risk management has to do with how you're ensuring the risks of the Commonwealth. Discretely presenting component units, that's just some more information on component units. Subsequent events, to the extent that there are any. And then any other notes that might be needed if, for instance, we found an error in the financial statements in the prior year and we ended up restating, we'd have a restatement footnote, or if we had a change in the reporting entity, we would have a footnote to that effect as well. As far as the required supplemental information, just a couple things here. You've got a schedule of funding progress for the pension plan and other post-employment benefit plans. Again, that's showing you multi-year information as to how these liabilities built up, how your contributions were made, what was required, what you put in. And generally, those span a 10-year period. Budgetary compliance, and that's shown at the legal level of budgetary control, and then notes to the RSI. Followed by the combining and other fund schedules. This is basically where you have the detail of all the non-major funds. And so if you remember, I said we had 48, I believe, with special revenue funds. You would see the detail of all those funds back here, as well as the debt service, capital projects, et cetera. You would also see non-major enterprise funds, internal service funds, the detail of the various pension and other post-employment benefit trust funds, agency funds, and discretely presented component units to the extent that they were required to have combining schedules. And then the last section, which is one of the more important sections and one of the sections where you can really get some good information, is the statistical section. And the statistical section has detailed information to provide you with information in evaluating the Commonwealth's financial health. It's basically 5 categories of information, and there's various schedules within each category. The first, financial trends. It's information about the Commonwealth's financial performance over time. It basically, you will see the net positions broken down each year for 10 years. So if you wanted to go across, you could see all that information. The entity-wide statements of changes in that position for 10 years. And so you would see the same breakdown for a 10-year period of time. Revenue capacity, information about your most significant revenue sources and how they've changed over time. Now, a lot of times those revenue sources when we're looking at taxpayers, significant taxpayers, et cetera, we're only going to show 2 years, the current year and 9 years prior. And that information kind of shows you who the most important employers were back then, who they are now, and what percentage of the tax base they make up. Some other things in the revenue capacity would be things like assessable base, the total property taxes, sales taxes, et cetera, that were levied over the years. The next category has to do with trends in debt capacity. How has your debt gone over the past 10 years? How much, in bonds do you have this year, last year, the year before, et cetera, broken down by the various types. And then also debt per capita would also be in there. But it's basically information about your debt. And from that, you can glean certain information about affordability with regard to debt. Demographic and economic information, basically the citizenry information, and then other operating information that may be deemed to be important. So that is the basic CAFR. I know it's a lot of information to digest in a short period of time, but it's just to give you an overview of how to look at the statement. There are certain interrelationships within the statement that as you go along, you'll start to see a little bit more. But with the amount of time that we have today, I really don't want to get into that, and you probably don't want to fall asleep. So. Thank you very much.
Of course, Frank. Frank's in heaven today. Yeah. Representative Janes has a couple quick questions for you gentlemen.
Yeah, these are going to be real softballs. In full disclosure, I'm a banker, not a CPA, so I recognize the importance of the work that you folks do, and we appreciate it. So for my edification, I guess it's probably assumed, but are the opinions qualified opinions every year on all phases of the reports?
The opinion that we've rendered in our time being here have always been unmodified opinions.
Have been what?
Unmodified.
Okay.
Okay.
How's that different from qualified?
The terminology has changed over the years. It used to be qualified, unqualified. It's now modified, unmodified. Basically, an unmodified opinion is where everything is, we consider, fairly stated in all material respects, and there are no questions and there are no issues. There's nothing out there that we take issue to or question. And that is what would cause a qualification. If there were issues that could not be resolved or were not resolved, then we would qualify the opinion to say, or modify the opinion to say, it's in all material respects except for this particular area.
Yeah, so I mean, for the CAFR, in all of our time executing, it's been unmodified. No qualifications, no exceptions within the opinion that we're issuing.
Okay.
CAFR specific.
You mentioned comparative budgets. How many years typically do you do? 3 years, 5 years?
With regard to the budget is usually a one-year document.
So it's not really comparative.
No. The MDNA is comparative. The budget is not. The budget is the budget for that year, financial statements, and the actual result for that particular year.
Okay. Currently, again, for my own edification, what is Pennsylvania's Moody and S&P ratings at this point? Used to be AA.
Off the top of my head, I'm not sure.
Were they
Depends on the
AAA?
rating agency.
Yeah, it does depend upon the rating agency. Off the top of my head, I'm not sure.
Okay.
Okay.
And does it matter if it's LIFO or FIFO, or does that not even enter into this
That doesn't.
historical accounting? It's not even okay.
It
Thank you.
really doesn't enter into it as much, simply because inventory is not critical to the financial statements of the Commonwealth.
Plus, you're always looking forward, not
Right.
backwards. Okay,
Yeah, LIFO
thank
and
you.
FIFO is generally used for tax purposes more than anything else in the private sector.
Thank you very much. Thank you, Mr. Chairman.
Chairman Briggs.
Thank you very much, and I echo Representative James' statement by thanking you for what you do. I lasted like 10 minutes, and then I kind of drifted a little bit. So, but Miriam brought me back to focus. Just a couple basic questions. Who is actually your client? Is it? I understand it's the Commonwealth, but who's management that you're working with? Is it the budget office or?
That's correct.
And the list of electeds, do you only get the information from the budget office, or do you deal with the other entities as well?
Well, when we're doing the financial statement audit, we are getting information from various agencies and departments throughout the Commonwealth.
Treasury.
Treasury,
And it's always very cooperative, no matter, over the years?
Always is a strong word, but I would say certainly from our perspective as the auditors, I think we've been very, very pleased at the level of cooperation. I think the budget office has a very structured process in place for when we don't receive things. There's a mailbox process they use. I won't go into all the details, but it helps get them involved to escalate that to ensure that we get things timely.
And how you had made a reference that you've done this for a number of years. How many years have you been doing this report for the Commonwealth?
This is our third year.
Third year. And is that a annual renewal, or is
It is now.
it RFP or?
It was an RFP. Our original contract was a 3-year contract with 2 one-year renewable options on behalf of the Commonwealth.
So there's some stability of.
At least every 5 years, we rebid the contract. So it's
Okay.
written for 3 years and 2 option years.
That's great. And you had mentioned, since you've been doing it, there's been no major issues or challenges that, I use the term that I'm not an auditor, a CPA. Modified, is that modified, not unmodified? And you focused on the high-risk funds, which are the larger funds. My experience just reading the paper, the challenges usually are in the smaller funds, the smaller operations, where what sort of scrutiny are you put on the non-major funds, I think is the term you used.
generally on the non-major funds, we utilize analytical processes more so than substantive processes. Keeping in mind that we are auditing at a materiality level, which means that we are focusing on what is considered to be material. An internal audit, there are various types of audits, and we're doing a financial statement audit. And so we're looking at material items. If you wanted to look specifically at the operation of a smaller organization at a much lower level, then you'd probably be looking more at an internal audit type of a situation. But part of what we do during our planning processes is we do discuss with various people areas where they may be concerned for us to take a look at. And when we get those areas, we incorporate them to the best of our ability into our process to try to spend some additional time or put some additional attention to it. The other part of our process is we take a look at different things every year. We don't look at the same items every year. We change it up a little bit, throw some curveballs, if you will, into the process so that we can address some things that we might not have looked at before. And some of those things may be, lessening materialities in certain areas, lessen what we have to do, or looking at things a little bit differently than they've been looked at in the past.
I would say one initiative we're working on with the Office of the Budget in that regard is in some of our application procedures and trying to look at procedures in which, with the use of technology and data analytics, are we able to test an entire population of transactions rather than just focusing in on the high dollar or high amount items, right? So before, we usually do things on a statistical basis, selecting high dollar values within our testing to ensure we get coverage. As technology has expanded, as the Commonwealth has improved their technology and reporting capabilities, we're able to do some things now through analytics where we can get greater assurance over all of the population of transactions rather than just a sample or subset of high dollar.
I appreciate the conversation. If during your review, if there was something that you thought deemed an internal audit, would that be something you communicate with the budget office, or would you communicate with the Auditor General's office to see, recommend that a deeper look might be needed?
Well, generally speaking, if we find an issue in an area, we may issue a management letter comment, which would be an alert to management to say, here's something you need to take a further look at. Here's an area where you might need to tighten controls. Here's an area where you might want to look at the business process a little bit differently. If we were still concerned about it, because of our relationship with the Auditor General's office, of course, they would be made aware of it. And then they could determine whether any further action from their standpoint might be warranted.
But that wouldn't be part of this report.
Would not be part of this report.
Okay. That's all.
Yeah,
You can finish, Jim. I'm sorry.
No, those are just things that we generally work with management, as well as I wanted to mention those things are communicated. We do participate and present to the Audit Committee every quarter, and so those comments and things are discussed and elevated to the Audit Committee as well.
Thank you very much. Thank you, Chairman.
And just officially, I know people hear that you're paid for by the budget office. You have professional decorum you must meet as CPAs, correct?
Correct.
So just review what that professional decorum is when you do this, and the risk that you take if you do not provide fair and accurate information.
All right. Well, we always have to approach everything with professional skepticism. In other words, not taking anything at face value. We can't be, well, we have to be independent, meaning that we have to be independent in both appearance and in fact, meaning that none of our people, can have an investment, if you will, in the Commonwealth. We can't have any other business relationships with the Commonwealth or any members of the Commonwealth management, or quite frankly, with the elected officials. We have to stay clean with everyone, if you will. As part of that process, we at a national level have a list of entities that we consider to be quote-unquote restricted, meaning that you can't invest in, et cetera, and the Commonwealth is on that list. So at a national level, it's not just the local people, but it's also the people within all of the offices of CLA throughout the country. So we have to maintain those professional standards of independence. If we violate those standards, quite frankly, the ultimate, we lose our license. And a loss of a license is a loss of a likelihood, so nobody's going to put their license at risk for something like that. If we have a difference of opinion, our responsibility is to call the balls and strikes the way we see them. I liken what we do to being an umpire in a game. We don't play the game. We just call the balls and strikes at the end of the game. And make sure that everything's being accounted for properly and that things are being handled appropriately. So at the end of the day, the ultimate is we lose our license, we get admonished, and that only has to happen once, and then we're in serious trouble with other clients as well. We have a national reputation to maintain, and we are not going to put that at risk for anyone.
Yeah, and as Keith mentioned earlier in his presentation, the Commonwealth does file their report with the GFOA. So they're looking at a review of the financials as well. Pennsylvania is not the only Commonwealth or state that we we audit and interact with in this capacity. So, to get comments back from the GFOA that we didn't follow standards or didn't report things in accordance with the government auditing standards and requirements, we simply can't put our relationship with 6 or 7 other states and commonwealths at risk for one of them to report things in a certain way that isn't consistent entirely with standards.
I think what's important here, too, is the audit is a joint audit, so you have both Clifton Larson Allen and the Auditor General jointly doing the audit and issuing the opinion. So you're not just getting one view. I think we get more for our money that way, really.
Representative Kim.
Thank you. I had a curiosity question. What other states have you audited? And if you could see any patterns that all states are experiencing, or how does Pennsylvania stand out? Just like to get a feel of comparison with the other states that you've audited in the past.
Can I start with that one?
I feel free.
I'll let Keith get into the technical details of things. But New Mexico, Kansas, Delaware, Vermont, we do the single audit for New Jersey, we do South Carolina. So there's a number of them and growing. I will say from my limited parts of all of those, it's a very difficult thing to render a comparison. The structure of the governments and the reporting requirements are very, very different. All of your agencies and departments are consolidated and reported collectively within the CAFR. In South Carolina and Delaware and other states, for example, their departments of transportation and other agencies get their own standalone audits separately. So the way in which they structure their component units and how their CAFR is aggregated is very, very different from state to state, which makes it very, very difficult to say, well, here's how Pennsylvania stacks up versus a Delaware, which, I mean, the way in which their education funding is done through their schools is entirely different. Maryland has, districts run at the county, as opposed to Pennsylvania having 500 separate school districts, which are independently audited. So it's very tough to compare, but Keith has much, much more insight into the financials.
Yeah, it's, to Jim's point, it's hard to compare because of the structures. For instance, Delaware, the school system is part of the state. So all the schools are under the state umbrella, as opposed to the schools either being under a borough, township, or, as in the case of Maryland, a county. So that part of it's different. The economies of each state is different. What's driving the economy, which then drives the ability to raise taxes, et cetera. The tax structures of the states are considerably different. Maryland has a heavy income tax. Delaware has a lesser tax. Pennsylvania has lesser tax, but Pennsylvania has some other taxes that Maryland may not have. So trying to compare those things, the funding sources make it difficult as well. The way the structure below the state or commonwealth level is dictates how revenue is raised at those levels, which then affects the abilities upstream to raise taxes, issue debt, et cetera. So it's really hard to compare one to the other, especially when you start looking at the economies, because the economy of South Carolina is different than the economy of Pennsylvania, which is different from the economy of Vermont, which is definitely different from the economy of New Mexico.
Chairman Briggs.
Thank you again. And you had mentioned the GFOA and that you submit the report to them. In the transmittal letter, it gives a very strong acknowledgement that for 31 years, the Commonwealth has received an achievement of excellence. Can you talk a little bit about what that status is? It sounds very impressive, and I'm sure it is, but could you talk about what that means for
We
us?
just received the 32nd Certificate of Excellence in Financial Reporting. So the Governmental Accounting Standards Board determines how this comprehensive annual financial report needs to look. And then the GFOA takes the reports that the states and local governments provide, and they go through their checklist for quality. So you know you're getting quality and you can rely on the report when you're seeing a certificate of excellence. And we have received that through ERP implementations, our financial transformation, consolidation, economic declines, ERA funding coming to the Commonwealth that really kind of shook our world. But still in all, this is something that we were able to prioritize and make. We feel it's very important. Mike and I are both CPAs. We take the same oath as any other CPA, and this is not a document that is politicized in any way.
Representative Ryan.
I want to get a copy of this and play it again tonight. This is just exciting. So it's nice to sit in a meeting where I actually understand what's going on. So thank you. I have a couple of questions that I'm going to ask for the benefit, since this is an informational meeting that will, I think, help people who might watch this later. So I said that somewhat tongue-in-cheek. Is a type of audit that the Commonwealth gets similar to a fraud audit, or are they different types, or is a fraud audit different than a normal audit? And I ask that question because I think it's helpful for people to know candidly the scope of things that are done.
Well, again, this is a financial statement audit, where in a financial statement audit, we need to be aware that fraud may be there, but we're not specifically looking for it. In a fraud audit, there's usually a specific accusation or a specific thought that there's something happening, and the audit is structured to ferret out that information or to get to a conclusion that a fraud has happened and here's the impact, or a fraud has not occurred. Generally, if there's a fraud audit going on, there's usually been an indication that a fraud of some sort has occurred, and the audit a lot of times is finding out how it occurred, who the perpetrators were, and what the dollar impact was in the fraud itself. But again, in a financial statement audit, our procedures are designed that if a fraud comes up, we have to pursue it. And in the financial statement world and in the fraud world, there is no materiality when it comes to fraud. So if a fraud does occur, we have to pursue it. We can't say, oh, it's only a $5 fraud, we don't have to deal with it. If it occurs and we're knowledgeable of it, we need to pursue it.
The other types of questions is, have you identified as part of your audit, do you look at systemic risks as well? So let me give you a couple different issues. In the employee benefit trust funds, as an example, just as an example, without getting into too many details, while they are separately audited funds, certain key assumptions that might exist there, such as the expected earnings rate on a pension fund, if they might be different than the reality of what could occur over a period of time, or if an investment risk is taking place over in those funds. How does that translate into how it impacts the state's financials, since we are guaranteeing all of the debt of the obligation of the unfunded pension liability, just as an example?
You want to take that? I don't think I can.
Well, from an audit perspective, we rely on the other auditors' work with regard to that information. The Commonwealth's financial statements are considered group audit financial statements, and so we are required not only to just rely on that auditor's work, but also look at their financial statements to see if there's anything untoward or anything that doesn't look right. But at the same time, the auditors of those organizations are bound by the same rules of conduct and the same professional rules that we have as well. And so unless we find something to tell us that there's an issue, we're generally relying on the work that they did, but we're also letting them know that there's a specific materiality level we don't want them to go above. And we generally have communications and good relationships with the other auditors. If it's an audit firm that we're not familiar with, we may have some more conversations with the auditors to determine whether there's any issues out there that we're unaware of. But we do have communications with them. As far as other systemic risks, to the extent that we are aware of them, we do bake them into the plan. Without going into a lot of detail, the planning portion of the audit is quite extensive.
Fantastic.
Does that answer your question?
It does. We're really trying to set the stage, because one of the concerns that I have in my dealings with both GASB and FASB, and as a financial matters expert, is that, as an example, most states and not-for-profits use an actuarially assumed earnings rate of 7.5%. In the private sector, publicly traded companies typically use 5.5 to 6%. That delta for the Commonwealth translates to about $25 to $30 billion. And my apprehension is should those two numbers ever come to pass with the elimination, and then Representative Grove would be disappointed if I didn't use this word at least once, if quantitative easing goes away completely, what would be the impact on the Commonwealth?
And just one comment to point out in regard to that. The disclosures in the notes do require sensitivity information included. So in the notes to the financial statements, we're required to show through the GASB standards, if say it's a 7.5%, we're required to show a -1% and a +1% if it were 6.5 or 8.5% return. So whatever the information settles at, we have to disclose what if it were less or what if it were more.
Yeah. One other issue with regard to that, the standards are very specific as to how that discount rate, if you will, has to be determined. So, you know, it's not a matter of I can pull a number out of the air and whatever number looks good is the one I'm going to use to lessen liability or increase it. There are specific rules as to how that's determined. And those rules were put into place when GASB 68 was put into place. As I mentioned earlier, we're going to be doing the same thing with OPEB. However, in OPEB, there's two risks. The one is the risk of the discount rate. The other risk is the risk of the healthcare cost trend rate. Okay, and so with regard to that sensitivity analysis, what you're going to see going forward is, for OPEB, sensitivity analysis of the discount rate, +1, -1, and the sensitivity of the healthcare cost trend rate, +1, -1.
Fantastic.
And so you'll be able to see the interplay of those two pieces and the effect that it has on the liability if it were to go up or down.
Mr. Chairman, thank you.
Yeah. All right. Thank you. Stick around. Still might have more questions, but Anna, go ahead, and thank you for you and your team's continuous work on financial stewardship of the Commonwealth. We appreciate it. I know you put a lot of work into this, and we do appreciate it.
We do, and we appreciate the invitation to speak with you today. To my left here is Michael Burns, and he is our Director of Accounting and Financial Reporting. It's a big job. I think the auditors mentioned they start in May. Michael starts much earlier. He's also responsible for the audit, and a number of years ago, we decided we were going to do a fixed price contract on the contracts whenever we went out for bid, and we've been able to save a significant amount of money using a fixed price contract on our audits, and that was to Mike's credit. He also manages the audit and makes sure that whenever these folks need audit materials to audit, they get the information into them. So it is a well-run operation, and Mike manages all that between management and all the agencies that need to participate, actuarial reports that need to come in, component unit reports that need to come in, as well as what the timing that we need to meet for the audit to be done on time. In order to get our Certificate of Excellence in Financial Reporting, we need to file with the GFOA by the end of December. Over the years, we've been able to go from a December 31st fire call to get it in back to, I think, as early as the first week in December. So that's pretty remarkable because of all of the component units that we need to wait for. All of the various component units that have to come in need to be brought into our annual financial report. They all have board meetings and boards that need to approve their financial statements. They have different auditors that have different timelines. And so if there were anything that you could do to bring all the component units in on an earlier time frame, we may be able to issue earlier, but that's really why we're looking at a December timeline. They start the audit in May, as Keith said, and it works right up through September, October. By the time we get into November, we're organizing the first draft of the report so that our team can review it, the auditors can review it, the Auditor General can review it, and it's really a nice team effort. And we don't always get along, we don't always agree, but we work it out, and there's plenty of standards to fall back on to eventually get to the right decision. I did want to mention that I am a previous president of the National Association of State Comptrollers, and we here in Pennsylvania are looked upon as a leader in state government for financial accounting and reporting. I often get calls asking how Pennsylvania is doing things, so that's a real honor, and I think you should be aware of that as well. Our comprehensive annual financial report is done on a state fiscal year. There are a few component units that are blended in to that report as our primary government. That would be the PRPA and, Mike, I had the other one here, Commonwealth Financing Authority. There's a few, like CSRS, that's on a calendar fiscal year, not a state fiscal year, so we take their most recent reports. We write to all the component units in the summer and ask them to get their reports in September so we can fold their information in where it's required in the annual financial report. You'll hear the term, and I think you heard it with Keith, the primary government, and I just wanted to take a minute to explain what all is in the primary government, because the Governmental Accounting Standards Board keeps expanding that primary government definition. So what it includes is all publicly elected members of the executive, legislative, and judicial branches of the Commonwealth. The primary government also includes the departments, agencies, boards, organizations, and organizations that are not legally separate. So, for example, it would be the information we collect from the Senate and the House, all of our departments like Human Services, Transportation, so we're bringing it all in. Because we have an ERP system, it makes it a bit easier, but there are still many standalone systems out within the agencies, and our auditors review those for controls, and we bring the information in as needed to do the full accrual accounting and the modified accrual accounting for this report. I believe you have a presentation in front of you. It has our annual financial report on the cover. It looks like this. This report, we don't print many copies of anymore, as you can imagine why. At one time, we were printing a copy, I think, for all of you, and every state agency had. Now it's on the website, so you can go to the Office of Budget website under Publications and Reports and get a copy of this report. So I'll be working off of that presentation. If you have questions, feel free to ask them as I go. What we did in preparing this presentation is we sort of walked through the CAFR, trying to put on a layman's hat. So we'll try to keep it non-technical. There are some acronyms in the very back of the report that explains some of the technical terms that we use. But I do encourage you, if interested, to read the notes to the financial statements. There's a lot of information there. The MDNA summarizes at an aggregate level what is in the financial statements as well. So the CAFR represents our audited financial statements, just like a business. A business has an annual report, and this is our annual report. All state and local governments are required to report in this fashion, and so some of the things we'll talk about that's in the report, we're not alone. Other governments have to show the same long-term liabilities as we do. The fiscal year ended June 30, 2017 is what we're here to talk about today. As you know, we're coming up on June 30, 2018, and so Mike's already working with the auditors to begin the next year, so much of this is a little old information, but this is what we have to present. The clean opinion means that we did not have any qualifications or modifications to the opinion, which is always a nice thing to see. That's our Christmas present, and that's what makes us happy in December. 32 years getting the Certificate of Excellence in Financial Reporting. And the CAFR is prepared by the Office of Control Operations within the Office of Budget, and in the Bureau of Accounting and Financial Management is where that work is done. But don't be misled. That's a very small group of people that handles the coordination and the compilation of the report and the analysis to make sure that the data is correct. They're in the system pulling down the data that's there. They're pulling in information from other systems. They're bringing in actuarial reports as well as component unit reports. So there's quite a bit that is done there. They work very closely with the state treasurer on the debt funds, as well as the auditor general throughout the audit. The audit is a joint audit of the Clifton Larson Allen contracted auditors and the Auditor General, like we spoke, and the opinion is also joint. So when you look at the opinion at the beginning of the book, you see both signatures there. And that's because they've each done components of the audit, then they review each other's work so that they can, in good conscience, say this audit was done in accordance with the AICPA audit requirements. The sections of the audit, not the audit, but the CAFR are on the next slide, slide 4. And this what we're detailing out is the financial section. So if you look at all these pages, it's a lot of pages, but there's an introductory section where you have your table of contents, your letters, and then you have your financial section where this is where the meat of the information is. And then you have your statistical section in the back where you have your trends. So what I'm talking about on this slide is the financial section of the CAFR. We start with the independent auditor's report. Keith had talked about that being unmodified. We move on then to the management discussion and analysis, which is taking all of those financial statements that we're presenting behind there and condensing them and summarizing them and trying to make it more meaningful than just numbers. Then we move to the government-wide financial statements. Many years ago, there was no requirement for a government-wide financial statement. The bond community insisted that governments needed a government-wide financial report. So that's when the invention of the statement of net position and statement of activities was required. That report is an aggregate of all the primary government and component units all brought together. So it gives you a very big picture. It also has all your long-term assets and long-term liabilities. So very different than what we had been used to seeing before this report was required. And as a preparer of a CAFR, we fought that because we said, our government doesn't want to see that. It doesn't have enough detail to understand why we're seeing the bottom lines that we're seeing. But we lost that battle because the GASB fully believe that there are financial statement users and the bond community that need to see those more aggregate positions. So the next then set of statements is the fund financial statements. So in deciding we needed to provide government-wide financial statements, we were still able to hold on to the fund financial statements because, as you know, you're looking at your general fund and your motor license fund or some of your more major funds. So behind the government-wide financial statements are the fund financial statements, and then the notes to the financial statements, which are very lengthy. We've often appealed to the Governmental Accounting Standards Board to allow us to shrink some of those notes, but it seems they add to, they don't take away. But there is a lot of information there. And then finally, the required supplemental information, the budgetary schedule, the pension disclosure. There's reconciliations between the full accrual and the modified accrual sets of statements. That's all part of the required supplemental information. So on slide 5, we have the independent auditor's report. And in the independent auditor's report, it talks about management's responsibility as well as the auditor's responsibility. And the auditors want it includes items that the auditors want to emphasize. So if they notice something that they think needs to be emphasized in that opinion, there would be a separate paragraph of emphasis. They identify information that's not audited, and then they provide their opinion. And like we said, we have had an unqualified or unmodified opinion for as long as I've been here. And that's a very long time. Hate to date myself like that, but that's a very long time. All right, slide 6. The management discussion and analysis is a fairly new addition to the CAFR whenever the government-wide financial statements were brought into the CAFR, and it presents factual information, and it analyzes the financial statements in a condensed fashion, and that's really there for someone that wouldn't maybe want to get into the financial statements like some of us love to do, and so they read the management discussion and analysis. The management discussion and analysis is government-wide statement. In the government-wide statements of the management discussion and analysis, we show the long-term health of the government because they're presenting all the long-term assets and long-term liabilities, keeping in mind that there's no intention by the GASB to suggest that we fund all of those long-term assets or liabilities, but it's something that the financial community wanted to see on our statements. The primary government in our case, at 6/30/2017, we had a positive net position of $13.2 billion. And that is down slightly, $320 million from 6/30/16. Capital assets increased $1 billion during that fiscal year due to increases in motor license fund asset investments. This continues the Commonwealth's investment in transportation infrastructure. And total revenues for the primary government, which includes, as we talked about, everything but the component units, included $83 billion total revenues, and total expenses $83.3 billion, so slightly over revenues. The MDNA also covers the short-term health of the government. So short-term health would be more focused on the governmental funds that are more modified accrual-based, where you're looking at funds that are available in the coming year or available at the balance sheet date. Governmental funds show the short-term health on that modified accrual basis of accounting that we are more familiar with. Again, not budgetary basis, but modified, meaning that it can be estimated, it may be available or it may not be available for 12 months, but it will be available within that 12-month period, and that's when we book it, and we call that an accrual by bringing it in even though it's not available yet. The general fund accounts for 80% of the Commonwealth's revenues and 81% of our expenses. As of June 30th, 2017, the general fund has a deficit of $698 million. The general fund's tax collections increased $444 million net of tax refunds during this 16-17 year. Also, on a short-term health basis, there was approximately 89% of the general fund's expenses that went for health and human services and public education. The health and human services, you can see there at 64%, and public education expenses, 25%. The largest expense for health and human services, of course, is the Medicaid, and Medicaid expansion is currently 95% federally funded, which can be seen in the intergovernmental revenue line on the statement of revenues, expenses, and changes in fund balance for the general fund. Enrollment in Medicaid increased by 82,000 people over the 16-17 fiscal year. Now, if we look at the government-wide financial statements, these are the full accrual financial statements at a very aggregated level. You don't see fund level information in the government-wide financial statements, and it's not because we excluded them, it's because that's the way the GASB expects all governments to show the government-wide. So what you do see here is the financial position and the operating results for the Commonwealth as a whole. It's a focus on financial obligations and they present the statement of net position and the statement of activities. So they changed the name of those statements so that there was no misunderstanding that they're different than the fund level statements that we've used in the past. These statements distinguish governmental funds from business type funds. So our proprietary type funds are in a different column than all the governmental funds. All the governmental funds being your general funds, special revenue funds, capital project funds, they're all in the governmental columns. So presentation a bit different. Includes the component units. Component units are legally separate, but we have some, the Commonwealth has some financial accountability for component units, and that's why they need to be brought into the financial statements. And these statements are measuring the economic resources. So the measurement focus is the economic resources, not the available resources, but economic. So longer term fixed assets, capital assets, long-term debt, long-term liabilities. On slide 11, the government-wide financial statement for 6/30/17 shows a total net position for our primary government at $13.2 billion. And you see a chart there below is a 2-year summary of the government-wide annual operating activities. So these are your revenues and expenditures. These amounts are in billions with a difference of a negative $300 million for June 30, 17. On the next slide, I lost my page number somewhere here. On the next slide, this illustration is another example of the cash on hand balance that has been deteriorating over time. I believe the state treasurer and the auditor general have been reporting on this as well. So what this shows you is we went from 46 days of operating expenses, cash on hand, down to 32 between 2013 and 2017. However, the good news is, as we look forward, we expect a close to a $4 billion cash balance at June 30, 18, and that's primarily due to the $2 billion in budget savings over the current fiscal year, $1.5 billion in borrowing for the repayment of the budget shortfall, and also a $1 billion increase in real recurring revenues over the last 2 years due to the tax bills that had been passed. So that's something we have to look forward to, and it will prevent us from needing any short-term borrowings in the next fiscal year. On slide 13, the fund financial statements, this is where you'll see the general fund and the motor license fund. And the standards require us to put major funds in separate columns, and any funds that are considered non-major are aggregated into a column usually called, what is it, Mike? Non-major fund column, yes. Yeah. So I think there was a question earlier about the smaller funds. You do see them combined in these earlier statements, and then we provide other information throughout the report. The fund financial statements report financial position and operating results. So you're looking at your individual funds. You're also seeing more of an availability of resources. You don't see those long-term capital assets or long-term liabilities in your fund statements. And that's primarily because there's generally no intent to fund those longer-term items through your various funds. We present governmental fund types, proprietary fund types, and fiduciary fund types at the fund level, and this section of the report also includes component units. So what you're seeing is cash, near cash, and also those items at the end of a fiscal year that are estimated to come in within a 12-month period, and then we would accrue both revenues and expenses back as we're presenting the balances for these statements. On slide 14, again, the fund financial statements as of June 30th, 2017, the total governmental fund balance was $4.7 billion. The other financing sources totaled $2.2 billion. That would be bonds and fund transfers. And the general fund reflects a deficit balance of $698 million as of June 30, 2017. On slide 15, the fund financial statements, here we're focusing on just the general fund. Again, amounts in billions, and you see that expenses slightly exceed revenues by $900 million, and that is during the fiscal year 16-17. Other financing uses made up a difference of $100 million. This would be transfers. And then the impact, the bottom line impact on the general fund balance was a negative $800 million. On slide 16, the annual change in fund balance is displayed here. You have $100 million beginning balance, your annual operating impact of the $800 million, leaving a negative $700 million balance for the general fund as of June 30, 17. On slide 17, the fund financial statements that we are discussing here are the proprietary funds. So proprietary funds are internal service funds and enterprise funds. And so they operate more either to break even if they're internal service or as an enterprise to make a profit. As of June 30, 2017, the proprietary funds had a net position totaling $755 million. Collectively, they generated $1.1 billion in net income for that fiscal year. The fiduciary funds is the next set of funds that are presented in the fund financial statement section. As of June 30, 2017, the pension and OPEB trust funds had a net position of $83.4 billion. And the Invest program for the local governments had a net position of $651 million. And the private purpose trust funds had a net position of $2.5 billion. And finally, the fund financial statements includes the discretely presented component units. So those are the component units, the majority of the component units. It would be all excluding CFA and PRPA, which are blended in with the primary government. And all of these reported a net position totaling $1.3 billion. And they present their financials on a full accrual basis using this statement of net position and statement of activities. And slide 20 is just an outline of the notes to the financial statements. Primarily what we're required to do is the first note is always a summary of the significant accounting policies. It's a good note to read if you need something to put you to sleep at night. But honestly, if you want to know how things work, and you only read one note, that's a good note to read. And then, of course, we're also required to report on many other pieces of significant information in the CAFR, and we listed some of those here, and some of those include things like the pension obligations and costs, the other post-employment benefit obligations and costs, other obligations and debt, insurance and claims liabilities, capital assets, the net position and fund balance of the funds. Tax abatements was new last year. It was the first year we had to report tax abatements. Component units are brought in, so we bring in their financial statements. We show the financial columns where they're appropriate in the CAFR, but then there's notes that we have to bring in from their financials as well, and include in certain notes to our financial statement. So they're there. And then any subsequent events that may have occurred after the balance sheet date, we would record in the notes as well. So that summarizes the notes. Wanted to draw your attention to note 9. Seth, I think you had asked about pension specifically. So anything you want to know about pensions is in note 9. And GASB 68 required, so GASB issues standards, and a standard gets a number. So GASB 68 is the standard for pensions, and it required employers to begin reporting for fiscal year ending June 30, 15. So pension funds SERS and PSERS have always put their obligations on their balance sheet. But in 15, that's when employers, governmental employers all over the country, were required to bring these long-term liabilities onto their balance sheet. Not something that anybody wanted to do, but that was a requirement of the Financial Accounting Foundation and the Governmental Accounting Standards Board. So the pension fund also describes the SERS obligations as well as the state employees that are still participating in the PSERS fund. That's in this note as well. It includes an explanation of the benefits, the contribution requirements, the accounting policies, the investment valuations, and the liabilities and expenses. And that's all pretty prescriptive in what the GASB requires us to report. The Commonwealth did report for June 30, 17, a SERS net pension liability of $15.9 billion, and PSERS, which is, again, just the small piece for those state employees that are in the PSERS plan, the net pension liability was $292 million. On slide 22, another note of interest would be the other post-employment benefits. This note includes, it details the plan administration, the membership benefits, contributions, along with the new plan reporting requirements effective for June 30, 17. And here, coming up in June 30, 18, we'll be required to bring those liabilities onto the balance sheet, very similar to the way the pension liabilities were brought in.
Do you know how big that's going to be yet?
I don't think we do.
I think for REHP, the numbers are disclosed in the footnotes because we're the plan. So we have the REHP and we have the RPSPP number. I think for REHP, and I can confirm it, his budget is about $20.1 billion.
Yeah. I think the idea, if we were an enterprise, we would need to show these liabilities because if we went out of business tomorrow, somebody needs to pay for them. We're not going to go out of business tomorrow, but still the public, for full transparency, it's believed the public and the financial community that's investing in state governments needs to know what those liabilities are and what the funding levels have been and will be going forward. And that's really the intent of that disclosure. As of June 30, 2017, the collective unfunded actuarial accrued liability for the 5 plans, which is the REHP, the state police program, the RPSPP, the judicial, the Senate, and the House, all 5 plans reported a total of $22.4 billion in accrued liability. And again, even though we have to report this, we fund on a pay-as-you-go basis. The GASB in no way has any expectation that a government's going to change the way they fund or budget for other post-employment benefits. So there's really, it's apples and oranges. We'll continue to pay as we go, but report financially what needs to be reported. On slide 24, another note of significance, especially since it's new, is the tax abatements. So this is on note 13 in the CAFR, and this is coming from GASB 74's requirement. There was a belief that taxpayers, as well as the financial community, needed to know what taxes were being abated. So the actual recipients of tax abatements are not required to be disclosed for the most part, but what we do need to disclose and was implemented in June 30, 17's report was any material tax abatement programs. So the definition of tax abatement programs are agreements in which a government agrees to forgo tax revenues and an entity agrees to take an action that contributes to economic development or provides benefits to the government or its citizens. So it's really a trade-off. What we have reported totals $342 million for the 16-17 fiscal year. And then some of the larger programs that are highlighted in the notes are the EITC program, at $116.8 million, the Keystone Opportunity Zone program at $78 million, and the film tax credit at $60 million. And we work very closely with the Department of Education, DCED, the Department of Community and Economic Development, and the Department of Revenue in forming these disclosures. On slide 25, this just highlights the required supplemental information. I think Keith mentioned the required supplemental information is not audited. There is a limited review done of these schedules to make sure that they don't find that we're in non-compliance with what's required to be reported. So we are reporting what's required to be reported. There's nothing missing in these statements. So what is included is your management discussion and analysis, which is preceding the financial statements. The auditors then apply limited procedures on the review of that. And then the required schedules are the schedule of pension amounts, which is a fairly new schedule, the schedule of OPEB amounts, the other post-employment benefit amounts, the budgetary comparison schedules for the major funds, which would be general fund and motor license fund. I think banking might be there too. And then notes discussing the budgetary balance, the prep process, and the compliance and the reconciliation schedules that Keith mentioned earlier. So that concludes our presentation, and we'll take questions at this time.
Chairman Briggs.
Thank you very much, and thank you for your leadership in the Office of the Budget regarding this important work. You had mentioned the total revenue, total expenses for the Commonwealth was $82 billion. Could you just, when I think of the budget, I think of it as $32 billion, and hopefully more than that in the future. But could you talk a little bit about what the difference is? I understand it's federal dollars and others, but could you?
Well, you're looking at, when you're looking at those aggregate numbers, you're looking at all the component units too. So you're used to looking at the general fund. So now you have all your capital funds, your debt funds, your general fund, your motor license fund. You have all your component units. So when you aggregate that all together, that's how you get to the big number.
And how much of it is federal, do you think? I will look at this tonight, and I'm sure it's in the report, but.
I don't have that number with me, Mike. Can you give us a minute? We might be able to pull that off of here.
Single audit, we can just grab the seat.
Oh, that's something to mention. Clifton Larson Allen also does our federal audit. The single audit is done right simultaneously and then subsequently to the financial audit. So we have a schedule of federal expenditures. We have had many successes in eliminating findings on the federal side, the Medicaid being the most recent.
I can't find the federal totals right now.
We're not finding federal totals right now.
Okay.
Yeah. In excess of 20. Yeah.
Yeah.
She said 80% of the general fund. General fund's $32 billion.
Oh, okay. If you could get that to us, that would be
Sure,
great.
we will.
Representative James.
Thank you, Mr. Chairman. Thank you for the presentation. I'd like to ask just one pension question, please. As of your most current reporting date with which you are comfortable, what is our actual unfunded liability in CSRS and PSRS?
That would be on our note 9. And it's several pages. You know exactly where it is.
Page 138. This is the 16.
Okay.
The current rate.
The,
So
Question.
from an actuarial standpoint.
I think you want it from a reporting standpoint, right?
Yes.
Yeah, okay. Yeah, it's on, in note 9, the current discount rate is 7.25%. and the unfunded liability is $15.8 billion.
In SERS?
Source.
How about PSERS?
Yeah.
And PSERS, we don't have the total unfunded liability for PSERS because the Commonwealth's liability for PSERS is only limited to the employees that are participants in the PSERS. So our liability for PSERS as a Commonwealth is $292 million. PSERS itself would have an unfunded liability that totals a lot greater than that. And based on the current law, that liability is split among all the school districts. So that would be, the total unfunded liability for PSERS would be in the PSERS annual audited financial statements. It's not in our annual audit financial
Okay,
statements. Because
thank you.
we don't have that liability.
I did notice the $16 billion figure, but I was hoping to get the other one, but apparently unavailable.
It's available in the PSERS audited financial statements. Because it's not a liability of the Commonwealth, it won't be in our financial statements. So it's in the PSERS financial statements that are on the publicly posted on the PSERS website.
Okay, thank you. Thank you, Mr. Chairman.
I think the $292 million that we had mentioned earlier was the state employees that came out of the PSERS fund but chose to work for the Commonwealth but chose to stay in the PSERS fund for retirement purposes.
Okay, thank you. You'd mentioned SERS is on a calendar year. How many different accounts and entities are on a calendar year versus a fiscal year in the Commonwealth?
I knew you were going to ask me that, Seth. We were just talking about that this morning. We know that SWIFT is on a calendar year, so State Workmen's Insurance Fund. SERS is on a calendar year. PSERS is on a state fiscal year. There may be a few other.
Turnpike is on a May 31st year end.
Why? Just, it was created that way and it's that way? Would it
You can
be,
establish as an organization, you can establish a fiscal year end, whatever you want. So we don't know the reasons why they established that,
But that would be in legislation.
okay. Would it be better financial management to get everyone on the same accounting year, fiscal year? Does it matter that much?
It would be better to have legislation that says component units need to file by an earlier date.
And what would that date be? Just to throw out a date, what would that date be?
Well, we often get draft reports from them, but they're not officially audited because their boards haven't approved the audit yet.
Okay.
And we work with that until they send it, and some come in as late as October, late October.
When do they have to file? How long do they have to file?
Well, if they're on a state fiscal year like we are, it probably takes them a few months to get their all their accruals together. And as you can see, there's lots of information they need to gather.
Mm-hmm.
Some of it they can gather ahead, like our notes pretty much are templates form we fill in as things change, because that's what we're required to report anyway. It doesn't change a whole lot. But some of it has to do with getting their auditors to complete their audit on time. If they have an issue, say they put in a new ERP system and the auditors can't get access to information, there's extenuating circumstances at times. And we do get cooperation from all of our component units. I don't want to suggest that we don't. But in discussions with the Governmental Accounting Standards Board, they believe that we should be able, all states and locals should be able to report earlier. The only way we could do that is drop the component units from the financial statement altogether or get them in sooner, which is a coordinated effort. Their response to those of us like myself, other state controllers, is we'll have your legislatures tell them that they need to submit sooner. But that's not always easy for them either. If I put myself in the position of the CFO at state system, they've got a lot to collect as well.
Yeah. And think about it, usually at the end of the fiscal year, we don't spend about $1.6 billion. A lot of that is you have later pension payments, some salary. We have some county reconciliation. I assume that plays into getting the component documentation done to submit to you as well, correct?
Right. And then the other issue or delay can be actuarial reports. So we need an actual report from unemployment, we need an actual report from SWIFT, I mean, those kind of things too. And that's what Mike works with the agencies to try to manage, to say, we need your report by this date, and then they work backwards to make sure that they get their professionals on board to be able to provide that information.
Okay.
Just one other clarifying item, too, to make sure it's clear, that any information disclosed on a different fiscal year in our CAFR is noted in there. So where we have Turnpike information, it's noted as May 31st, or where we have SWIFT or SERS, it's noted in here so that you can see.
Yeah.
So there's no mixing years that you can't see in here.
Okay. So SWIFT, there's 4 kind of funds with negative net positions. We have SWIFT, State Lottery, State Stores, CFA, and Turnpike Commission. SWIFT and Turnpike Commission, even though they're on separate calendar years, that's still accurate that they still would have a negative net position at the end of that fiscal year, correct?
Right.
CFA is an entity among itself, I usually say. Now, they have a net position of $1.2 billion. They get sales tax revenue portion as part of their revenue source. Do you have any detail on why they have a large net position in there?
No, we don't.
Okay.
And I don't want to mislead you. When we bring in a financial statement that's as of December 31st, it isn't updated to June 30th. We bring it in as it was reported and audited as of December 31st.
Okay. Is that, if you recall the net negative positions, is that a normal trend to see those within those specific 5 funds, to see a negative net position?
I have to look back and see what the variable, there's so many variables that go into the negative net position. We'd have to look at that to really answer that question.
Okay. Representative Bryan, do you have any questions? You're good? You good?
Ask another one?
Yeah, go ahead. Yeah.
I don't want to hug the microphone, but I do have one other one. I was intrigued by your, I don't see the slide number, but it's the government activities days cash on hand ratio, which we've all heard has been slipping. And I guess it looks like we went from about the ability of the government to work for a month and a half to about 1 month if we stop collecting revenues. What is that around the country? Are we in danger here? Should we be doing something about this? What is your opinion on that?
I really can't comment on that because every state economy is different. So when I get out to...
Well, we only have other states to compare ourselves to.
Exactly.
So
Exactly.
If you want to go off the record, well, I guess we can't go off the record.
Yeah, there's so much that goes into those numbers. You really can't compare state to state.
Okay. Question withdrawn, I guess.
How many states, and maybe going back to your look, number of restricted special funds compared to other states? Do we have more or less kind of restricted funds or special
Different way of
funds?
asking my question.
Yeah. Than other states?
When you say funds, are we talking about funds or are we talking about cash?
The restricted accounts, restricted funds, special funds, those kind of things outside of the general fund. So you have your general fund account, then you have your special fund account.
You're talking
Yeah.
about counts
Yeah.
of funds.
Yeah.
Again, it depends upon the government. Just to put it in perspective, a county or a city in Maryland may have 5 funds. The same city in Massachusetts may have 150 funds. So to try to compare one place to the other is very difficult to do. The idea in funds is to take a look and say, do we need all the funds that we have? Do they make sense for us? Not necessarily, do I have the same number as my neighbor next door? Because they may be operating in a totally different environment. I had a client years ago that had 32 funds, and among those funds was the 4th of July fund, where they accumulated money to buy the fireworks for the 4th of July. Well, you generally had about $10 in it most of the year until they collected all the money to buy the fireworks. Did they really need that fund? No. So when you're looking at the number of funds, you have to look at, do I need them? What's the function? Do I still need that function? And does it still make sense? Because generally people break out funds to emphasize or to keep a specific watch on something. Within the government accounting, you're only required to have a general fund and enterprise funds. Within the governmental category, special revenue funds are only there if you want them or you specifically need them because of legislation. Debt service funds are only there because of specific legislation or specific requirements of debt. Capital projects funds generally are there because you've decided that you wanted them either legislatively or a decision has been made. The only real requirement in the governmental funds is for a general fund. Everything else is optional unless specifically legislated or specifically required by an external third party. So I don't know if that answers your question, but
It does.
Okay.
Yeah.
I actually appreciate that question because over the years, I've read legislation that says create a new fund. And I've looked at it and said, do we really need a new fund or just a new account? So that's something to keep in mind. We might not need a fund, but an account to account for separately whatever you want to track.
Yeah, because, looking at the amount of special funds, particularly those with general fund revenue taking into it, I look at the amount of general fund revenue. I've always been curious about the correlation between driving money out of the general fund into a separate account that continues to grow versus the troubles we've had in our general fund. I know the Treasurer's Office as well as budget have tried to adjust payment schedules, but again, when you drive money out of the general funds, it creates a hole in it, particularly with a lot of, I would say, accounts that were created that could easily be brought back in. But that's our policy decision, not the accountants.
And every time you create a new fund, Mike's group has to go through all the accounting standards and figure out what it classifies at and where it goes on the CAFR.
As far as the net position of the Commonwealth, you had mentioned we're going to be potentially a positive for this coming year, it looks like.
Cash position, yes.
Cash position. Obviously, part of that is about $1.7 billion of borrowed dollars that go away. Do you assume after the borrowed money's out of the system that we will be back at a positive or a negative cash position?
We expect a positive cash position.
Still positive?
Yes.
Okay. That's the questions I have. Anything else? You do? Representative Ryan? Yeah.
Yes, sir. Thank you.
Oh, you don't?
No, I haven't.
Oh, you don't? Okay. All right. I think we're good. Thank you all so much. We appreciate it. We appreciate the hard work of the Auditor General's Office, Budget Office, and our third-party vendor to put together the financial statements, and appreciate your 101 and helping us work through it. Anything from you?
Thank you very
Nothing?
much.
Thank you very much. Hopefully everybody has a great rest of your week and a great weekend.
Thank you.
Thank you.
Thank you. Appreciate it.